So again, this is open enrollment 2021. There's going to be some changes, and we're going to walk through that today. And again, I can answer any questions that anybody may have. Um, these benefits go into effect on January 1st, 2021. So just quickly to kind of review, I think at this point a lot of people have heard this or know this. We are moving from Harvard Pilgrim to Connecticut. That decision was obviously carefully made. The senior leadership team, along with myself and my team, we did work hard to try to get the rates as low as possible. Harvard Pilgrim gave an increase that was really unsustainable to the organization. Harvard Pilgrim was loading their rates due to the coronavirus, COVID-19, a lot more than any other carrier, and that really kind of played into this. And it's always important to Carol and the rest of her team, Eric and Jody and the whole team, that we want to make sure that we offer you affordable quality benefits. We are going to offer 4 plan designs with Connecticut. Again, there are changes to the per pay period cost. The dental plan is going to remain with Delta Dental. There is no increase to the dental per pay period cost. The voluntary vision plan is going to remain with Anthem. There is no increase there. And then the basic life insurance is changing to the standard. This is 100% employer paid, but we are changing carriers. And on the voluntary life, we are changing to the standard. And there is going to be a change there, albeit a good change, and we'll go through that when we get to that particular slide. So with Connecticut, again, I mentioned we're going to offer 4 different plans. We're going to label them plans 1 through 4. 1 being the most expensive plan, sort of the highest quality in terms of actuarial value. However, just because it's the highest quality plan doesn't necessarily mean it's the best plan for you. This is really a decision that you need to make. It's a very individual decision, understanding what your out-of-pocket costs are for certain features, certain conditions, certain things you may have lined up for next year. Is all really important. It all factors in. The cost of access plus the cost of your per pay period deductions are all a factor here. Plan 1 does not have a deductible. So it's a true copay plan. Office visits are $30. Specialist visits are $45. Preventative care on all 4 plans, and I'll say it on each plan, but all 4 plans is covered at 100%. So preventative care is your annual physical, depending on age, colorectal screenings, mammographies. These are all preventative. One thing I always like to point out to people is you have to make sure that when you go for your annual physical, that everything the physician is doing is considered preventative in nature. We get a lot of phone calls that somebody went for their physical, it was supposed to be 100% covered, and they got a bill. Many times something that's been going on, and it goes from a true preventative and it moves into a diagnostic visit. So you can be charged if everything that the physician does is not considered preventative. So you want to have that conversation with the physician. Advanced imaging on this plan is a $75 copay, and that's limited to $375 per year. Urgent care is a $75 copay. Emergency room is a $150 copay. And your inpatient hospital stay would be a $500 copay per day, up to a maximum of $2,000 per year. And any outpatient hospital event is a $250 copay. The prescriptions on plan number 1, it's a $5 copay for tier 1, it's a $25 copay for tier 2, and it's a $40 copay for tier 3. Tier 4 are your specialty meds. It's 20% coinsurance up to $150 maximum. What that means is if you're on a tier 4 drug that's $500, you would pay 20% of that, you would pay $100. If you're on a tier 4 drug, like a Humira, that can be in upwards of $4,000 a month, you're going to pay $150 maximum. So if it's less than $150, you'll pay that. If it's more, you're going to be maxed at $150. There are out-of-network benefits on this plan. There is a deductible out-of-network. It's $2,000, and everything goes towards that. It's $6,000 for family. There's co-insurance. So you really want to try to stay in network if possible. And Connecticut does have, an extensive network. You should have no problem with Connecticut. They do have a national overlay, so you really should have no problem staying in network. Plan number 2 is what's called a hospital deductible plan. Hospital deductible plans, inpatient and outpatient hospital services are what track towards that deductible. Office visits on this plan are a $30 copay. Specialist visits are a $45 copay. Again, preventative care is covered at 100%. Advanced imaging is a $75 copay. Urgent care is a $75 copay. Emergency room is a $150 copay. And your inpatient and outpatient hospital services, they track towards a deductible. It's $2,500 for the individual, $5,000 for family. Once that deductible's been met, then everything's covered at 100%. And the prescriptions are the same as plan number 1. It's $5 for tier 1, $25 tier 2, $40 tier 3, and then the 20% up to $150 max for tier 4. Plan number 3 is a deductible plan. However, office visits have a copay. So this is somewhat similar to the 3 free visit plan that we had last year with Harvard Pilgrim. It's slightly different as there are not free visits, but any office visit to your primary care physician is a $30 copay. Specialist visits, advanced imaging, urgent care, emergency room, inpatient and outpatient hospital services all track towards the deductible. The deductible is $2,000 for an individual. It's $4,000 for a family. Again, preventative care is covered at 100%. And your prescriptions are copay from day 1. So it's a $5 copay for tier 1, a $25 copay for tier 2, $40 copay for tier 3, and then the same 20% coinsurance up to $150 maximum on tier 4. There, again, are out-of-network benefits. However, it can get very expensive out of pocket, so you do want to stay in network. Plan 4 is a true HSA HMO high deductible health plan. Everything in this plan tracks towards a deductible. Again, preventative care is covered at 100%, but any office visit, specialist, advanced imaging, inpatient, outpatient, all track towards that deductible of $3,000 for an individual, $6,000 for family. Once that deductible's been met, then everything is covered at 100%. The prescriptions, they also track towards the deductible. So you would have to meet your deductible first, and then they do carry a copay following the deductible, and it's the same copay as the other 3 plans, $5, $25, $40, and then a coinsurance to $150 maximum. Plan 4 does not have out-of-network benefits. It is in-network benefits only. Remember that if you're traveling and you have an emergency, I know most people are not traveling right now, but if you are and you have an emergency, that's always considered in-network. Any emergency is considered in-network. For the cost per pay period, I'll just leave these up on the screen. I'm not going to go through each line, but I will leave these up on the screen for just a minute. These are also available in the packets that you're going to be printing, as well as when you log into the online portal. All of these costs are going to be available there for you to view as well. Does anybody have any questions? You are able to unmute yourself if you have a question. I'll just kind of stop for a second as we move through the medical. Does anybody have any questions on the medical? Okay.
I just wanted to add real quick that everyone has access to the enrollment guide on the MITC homepage. There's a link there for a PDF of the enrollment guide, so you can view it and view all the prices and all the information for the basic enrollment guide, and there. So you don't have to print it necessarily because it is all available. If you want to, you can. I do have packets in my office as well, although I'm not in my office currently. So.
Great. So I think this is an important slide. Teledoc utilization, so telemedicine. Every health plan in the state of Connecticut has to have telemedicine. Telemedicine has seen close to a 500% increase in utilization since the beginning of March. Obviously, that has everything to do with coronavirus and COVID-19 and people not wanting to go into a physical facility. I think the urgent care centers are way down in terms of people going into the urgent care facilities. Some of the simple, really commonly treated medical conditions, Teledoc is 24/7, 365 days. You would be speaking to a physician within the state of Connecticut. Jody, is there a chat?
Yes, someone said they had a couple questions, so I just messaged them, said that they could feel free to ask them in the chat, or if they wanted to, message them privately, they could. So.
Okay, they can also unmute themselves and ask too if they'd like. And just feel free if you have a question to interrupt. So again, you do need to register online. I would strongly recommend everybody register after January 1st on Connecticut's website. You really want to be registered prior to needing the benefit here. You would go to connecticut.com, request a consult. You would be contacted by a physician from within the state you are physically in. So if you're in Massachusetts, it'll be a Massachusetts doctor. If you're in Connecticut, it's a Connecticut doctor. It's a $45 copay, will be applied to your deductible if you're in the high deductible plan. If you're not, it would be a $30 copay, same as going to the primary care. However, you don't have to physically go. The physician can send a prescription to your local pharmacy. And again, commonly treated conditions, cold and flu, allergies, bronchitis, skin inflammation, sinus and respiratory infections, ear infections. All of these can be handled by telemedicine through the doctor by telephone. So the HSA account, the HSA is a bank of your choice. I know a lot of people were using United. They were bought out by People's, and there are some fees involved with People's Bank. So you can go to any local credit union, any local bank that you have. There's online banks available. You just need to get that information to Jody if you are going to change banks or use a different bank. Go ahead, Jody. I saw you unmute yourself.
Yeah. So I just wanted to add here for the HSA information. If you're going to choose to have a bank account other than People's Bank, I did do a little research because I know a lot of people are having issues with People's. I did a little bit of research. I found about 5 different banks that offer an HSA information. So anyone who signs up for an HSA, I will be emailing information about those other banks that I did find. That has a little bit of back information, how much fees and things like that they might charge for that. So, but I know people were having issues with People's. They still are. They're charging about, if you get a paper statement or if you're have under a certain amount of money, you're getting charged fees. You can get up to $7 in fees right off the top every month if you're not paying attention. So that's a lot if someone's only contributing, $10 or $20 per pay period. So.
Yeah, and there's so many banks that offer very little or no fee HSA accounts. So I would strongly recommend if you're paying anything more than $4 or $5 a month, it's certainly worth looking at alternatives.
Yeah.
HSA accounts it's pre-tax contributions. So, every dollar you put in there comes out prior to being taxed. It grows tax-free, tax-free distributions for qualified healthcare expenses. If you ever have any question about what a qualified healthcare expense is, it's a pretty expansive list. The IRS.gov is probably the best place to go. It's very easy once you get there to find health savings accounts, and then there's a huge list of what's considered qualified. Unused funds not only roll over from year to year, they roll over for the rest of your life. These accounts, these HSA accounts, it's your account, it's in your name, you control it. Any dollar that goes in there is yours to spend on healthcare expenses through the rest of your life. These can be used in retirement to pay Medicare premiums. And again, they can be used tax-free for any healthcare expenses. If you do use it for a non-qualified healthcare expense, there is a 20% tax penalty in addition to paying the income tax on those dollars that you've used. There are max contributions, so the IRS does have a maximum amount you can contribute. For a single individual, it's $3,600. For a family, it's $7,200. If you are over the age of 55, as I had mentioned, you are able to use your HSA account in retirement. There's what's called a $1,000 catch-up provision. The dental insurance is going to stay with Delta Dental. Delta Dental has the largest dental network in the country. In Connecticut, them and Anthem are sort of neck and neck in terms of the size of their network. There are different Delta Dental networks. If you are using a Delta PPO dentist, so if you're able to go on Delta Dental's website and find a PPO dentist, your preventative care and basic care are both covered at 100%. The major care is covered at 60%, and the deductible is waived. if you're on what's called Delta's Premier Network or a non-participating Delta dentist. Again, dental and medical are very different in terms of their networks. If you're on their Premier or a non-participating dentist, preventative's covered at 100, basic care is covered at 80, major care is covered at 50, and you will be susceptible to the deductible for the basic and major services. Now, more importantly than the percentages covered, if you go to a dentist in the PPO network, the services you receive are going to cost less, meaning that $1,000 annual maximum that you get from Delta to use on dental will go further than if you're on the Premier or a non-participating dentist. So you get more out of your benefits if you're able to go to a Delta PPO dentist. You are able to carry over part of your $1,000 if you don't use it. A lot of people this year did not go to the dentist. They were not able to, fears of the virus, obviously. But to carry over, you do need to receive at least one cleaning or one oral exam during the plan year. And you can carry up to 25% of the unused portion. Again, it's a maximum of $500, but you are able to carry over. And you see the per pay period contributions on the screen. There was no change. The vision insurance is going to remain with Anthem. Again, in-network and out-of-network, both are allowed. It's certainly your choice. However, if you have the vision plan and you're able to go in-network, you get more out of the benefit. The exam once per calendar year is a $10 copay. This is a comprehensive exam. Frames are a $130 allowance every 2 years, then an additional 20% off that remaining balance. Contacts, elective, conventional, disposable, are $130 allowance and then 15% off. Medical necessary contacts are a $0 copay, so it's paid in full. That's every 12 months. Lenses, copay or discount based off the lenses that are needed, and that's once every 12 months. Again, out of network, you still get benefit. However, it's an allowance. So you get $48 for an exam, $64 for frames, $105 for contacts, $210 if it's medically necessary, and then you get a reimbursement on lenses as well. So again, they have an extensive network. Most of your target lens crafters are all going to be in Anthem's network. Your benefits are just going to go further if you are able to stay in network. So the life, I mentioned, the life accidental death and dismemberment is moving to the standard. This is an employer paid benefit, the life insurance. The standard gave us a better rate. They pay their claims. That's really the most important thing. If anything was to happen, you do get 1 times your basic annual earnings to a maximum of $100,000. Accidental death and dismemberment is the same thing. 1 times your basic annual earnings to a maximum of $100,000. The voluntary life is moving to the standard as well, which means the employees of Allied have a pretty unique opportunity here. Because we are moving carriers, you are now allowed to purchase up to $110,000 of life insurance as an employee without any evidence of insurability. So if you have waived this benefit in the past, it doesn't matter. If you have any sort of illness, whether it be terminal or serious or not, you are still able to elect up to $110,000 of benefit without any evidence. So I strongly recommend, if you do not have life insurance outside of what you have with that Allied provides, it's a great opportunity to purchase life insurance again, despite any health condition that you may have. An employee can purchase in increments of $10,000 to the max of $500,000, but it cannot exceed 5 times your annual earnings. Employees, again, are guaranteed $110,000 without the health questionnaire. Anything in addition would require the questionnaire. If you wanted $200,000 of life insurance and you had to provide a health questionnaire and they deemed that you were not eligible for that, you will still receive $110,000 of life insurance. So it does not disqualify you from receiving the $110,000 guaranteed issue. Spouses can also have insurance in increments of $5,000 up to 50% of the employee's coverage to a maximum of $250,000. Spouses are guaranteed $25,000 without a health questionnaire. Children's a flat $10,000, cannot exceed 50% of the employee's coverage. Again, really important that if you've previously waived this, you still can elect up to $110,000 without providing evidence of insurability. So starting yesterday, the Employee Navigator, which we've now used for a couple of years, the Employee Navigator portal has been opened. You are able to go on to employeenavigator.com and make your enrollment decisions. All of the plans are on there. Any document that you would need is also on there in the resource tab. You're able to click on that and view those documents if you really wanted to drill into the details of every plan. All benefit eligible employees do need to log on and either complete or waive by November 30th. Once you've completed your plan elections and make all your final decisions, there is a button to finalize those decisions. Just make sure you finalize that. You are able to print out the summary if you choose to, the summary of what your benefits look like. And that website is accessible throughout the year as well. So if you ever have a question and you didn't print it, you're always able to log back in there and view what you selected. If you have any questions, that you're not comfortable asking today, you can reach out to us via the benefit helpline. You can reach out to Tracy Devitt, the senior account manager, directly. Her number is listed here. The carrier contacts, as well as this number, are in those packets. They're also available on Employee Navigator. We want to give you every opportunity to answer any questions that you may have to make sure that you're comfortable with what you're selecting. So please utilize that. Reach out to us. If you can't find the information, reach out to Jody, and certainly she'll connect you with us. So that's kind of the end of the presentation. Just, really pretty simple. I mean, the changes are on the medical, but I think people are familiar with Connecticut. Again, a local carrier similar to Harvard Pilgrim that I think will do a good job customer service wise. But if you have any questions now, please feel free to ask. And again, if you're not comfortable asking, certainly, we can take any questions via telephone.
I'm going to address the comment in the chat. So the question was, what if I do not use it all by the year end? So the $27.18 that you're paying off the top goes towards your premium. So that is a separate piece for the HSA. If you choose to have an HSA bank account, that's a separate piece. So you would put whatever contribution you want to the bank account that is set up as a direct deposit directly through payroll. So you're paying the $27.18 for your premium for the year, every pay period, and then you would put additional amount into a bank account. That's all pre-tax contributions for that additional direct deposit. And yes, it rolls over from year to year. Ryan had talked about that a little bit. And if you don't use the funds and you turn whatever age, you can take them out. Until then, they can be used for your medical, dental, vision benefits, other qualifying expenses. I put two links actually, one for the Connecticut, it's a blog link, but there's a link in there, which I also posted, that has information on qualified expenses for the HSA.
And Steve also asked about if he was happen to find work elsewhere. So yeah, I mean, the account's yours, Steve. Now, if your new employer, if you do find a new employer, first of all, they won't be as good as Allied, but if you do find a new employer, you are able to use those funds. If they do not offer an HSA plan, you won't be able to add to the account. So you have to have an HSA qualified health plan to contribute. But let's say your new employer has a copay plan only, you can use the HSA money to pay copays. So you can still use it, you just can't contribute to it.
And there's a lot of things that you can use that money for. As you can see, if you click on the Learn Health Equity link down there, I mean, you can use it for over-the-counter stuff as well as prescription items, dental expenses and such. He did also ask HMO versus non-HMO. Can you speak to that, Ryan?
I mean, he said he heard HMO is typically a bad word. I would like to hear what he's heard. But I wouldn't, I wouldn't worry about with Connecticut. I wouldn't worry about HMO being a bad word. I would have to understand what he's heard about HMO to really answer that question.
Yeah, I haven't heard anything to that nature.
No, and Connecticut's reputation in the state of Connecticut is certainly, they have a really good reputation.
Yeah, we've always had HMOs. So.
Yeah.
But if anyone has any questions, feel free to unmute and speak up. And everyone has access, obviously, to Employee Navigator. I had them log in, actually, Ryan, a couple weeks ago to verify, contact information, address, that sort of thing. So everyone is familiar with logging back into the system. So it shouldn't be too difficult to, log back in this week or next week.
And Jody, I think you answered this, but I just want to add to it. So one of the questions he asked was, can I put more pre-tax dollars? And the answer is yes, up to the maximum. Now, you can also contribute post-tax money. You would then write it off on your taxes at the end of the year. And the reason that I bring that up is, let's say you have nothing in your HSA account, you haven't contributed to it, and you get a $250 bill that you have to pay from your primary care doctor. You can actually put $250 rather than sending it directly to your doctor, put that money into your HSA, then pay your doctor the $250, and you will get the $250 tax break on your taxes. So it actually does it never makes sense if you have an HSA to pay your doctor with post-tax money out of your banking account. You're much better off first putting it into your HSA and then paying your doctor with those dollars to get that tax break. That makes sense, everybody? The other thing too is, if you have a hospital bill that you're unable to pay, we all know that hospitals will work out a payment plan. So that's, again, another example that the hospital says you have to pay us $250 a month for the next 6 months. Put the $250 into your HSA, pay them out of the HSA. Until you've maxed out your annual amount, you should always be paying your bills out of your HSA. The other thing that you can do is you can pay your doctor $250. Once you have $250 in your HSA account, you can draw the $250 out, put it in your own banking account, take it out in cash, do whatever you want with it. Just document that you had spent the $250, keep the receipt, but you are able to take the funds from your HSA after you've paid the doctor.
I'm going to add also, our payroll department is really fantastic, and they will do like one-time increases or, smaller increases. So if you get some extra money, if there's an incentive pay or something like that, instead of putting that money and have it taxed, take that money and put it into a pre-tax, your direct deposit. So that goes directly through the payroll contributions. So if you're, contributing $20 and suddenly you get, an extra $250 in your check, and you just want to take that $250, change your one-time direct deposit, to include that $250, and you're not even gonna realize it was there, and it's only benefiting you with the pre-tax.
One thing you can guarantee is any money that you put into your HSA account, you will someday use. Whether it be next month, 6 months, 5 years, you will use that money. Again, if you build this account, in build and build and build and go into retirement, turn 65, turn whatever age you retire, and you purchase a Medicare plan, you can use it for Medicare premiums. But you will use these dollars at some point down the line. So, younger, healthy, take advantage of it now. Put the money in now, so that you're, down the road where you have a baby or you have to have a surgery or something along those lines, you have those dollars available to use tax-free. And I think once you have the money in there, one of the things we really didn't talk about on Connecticut's website, and again, I mentioned, please register. There's a lot of information there. You're able to track everything. You're able to price different things out. So, if you're ordered to have an MRI, if you're ordered to have a CAT scan, an X-ray, you're able to go. You don't have to go where the doctor you're seeing says you need to go for that MRI or X-ray. You're able to go get an X-ray or MRI wherever you'd like to go get your X-ray or MRI. The pricing differences around the state of Connecticut for an X-ray or MRI versus another facility can be pretty extreme. And when I say extreme, I'm talking potentially over $1,000 difference between the cost of one MRI versus another. So Connecticut's got that information available to you. I strongly recommend being an active consumer, because that's not going to change. It's only gotten more difficult. I'm a consumer of healthcare. I have to go through these same things, but the tools are catching up and are available. So again, just be aware of that. An X-ray is an X-ray, and if you can save $500 from one facility to the next, it's certainly worth spending 5 minutes on their website, putting in your zip code and seeing the cost of local X-rays in your area.
With the, if you do choose, not to keep harping on the HSA, but if you do choose to go with the HSA, a lot of the prescriptions, your basic maintenance meds, things like that, can be very inexpensive, if not free, for some of the maintenance meds. So that's really important to remember as well. So just because it says, oh, you have to pay outright for it, doesn't mean you're paying some, exorbitant amount of money. I have maintenance meds. I pay anywhere from $2 to, sometimes $12 for a prescription. Sometimes I get them for free. It all depends on who you're using for a retailer, or if you do mail order, negotiated prices are always a little bit different. A couple of the questions that were asked yesterday from some people. They were asking about, preventative care. Yes, you have your annual physical, that's preventative, mammograms. If it's your annual mammogram, yes, that's covered. Someone wanted to know how to find, check for doctors. So you can do a lookup if you go to the Connecticut website and do like a find a doctor. So that is an option to be able to go, look that up prior to signing up for the plans. I can tell you that Connecticut has a very extensive network of physicians across, New England as a whole. Somebody asked about digital versions of their ID cards for Apple Wallet. Those will be available also if you so choose. There was some information, if you look through the packets and the paperwork, there is information in there about the mental health and substance abuse services, counseling services, very important right now. It's kind of a hot topic for a lot of people. So there's a lot of information, good information in there about counseling services. So.
Jody, I have a question. Can you hear me?
Yeah.
About the telemedicine. I've kind of always wondered about this.
Yep.
I mean, if you have these symptoms of cold, flu, upper respiratory, all that stuff, so how does a doctor really make a diagnosis without listening to your lungs or looking in your ears and things like that?
Well, I know that you do a face-to-face. It's kind of like a FaceTime type call that you end up doing with them. So they're going to be able to hear you and talk to you. You can talk about your symptoms. They might even be able to hear the rattling, kind of in the chest if it's kind of bronchial or something. But, they make the best decision they can. If they feel they can't make the decision, a lot of times they'll refer you.
They'll always err on the side of caution. But again, it's if they don't resolve the problem, they don't charge you.
Yeah.
So if they have to send you to another facility, you do not get charged. So that's important to know. So it's a good first step. And it's a very interesting question in today's world, right? I mean, it's such a weird time right now to say I don't feel well. Everyone kind of looks at you and like,
no one wants anything to do with you if you don't feel good.
I tell my wife I don't feel good. I have to sleep out in the woodshed. So it is a weird time, and I think that physicians are going to err on the side of caution, obviously. But these are things that, for the most part, right? You every year get an allergy infection, right? And your doctor, a lot of primary care doctors are doing consults by phone, but they're charging the full amount. Right. So if you're on a high deductible health plan, a primary care physician visit is called $175, depending on what you're going for. And they will charge you for that phone call $100, and they bill Connecticut the full amount for that visit as if you were in the office. So they may say they're doing telemedicine, but they're just doing a consult via telephone. Telemedicine, the $45 copay if you're on the high deductible plan, the HSA plan, is significantly cheaper than what that visit would be. We've heard some physicians charge a little less, but some are charging the same amount. So just be aware of that. But again, it's really for the things you sort of could diagnose yourself. And it's a good first place to start. You know, what do you think I should do? Here's what I'm feeling. I'm concerned. And again, they're always going to err on the side of caution, but there's a pretty high rate of you know, problems being solved on telemedicine.
With Harvard Pilgrim, I mean, we still technically have another month left with them. They were at one time earlier in the year, they were waiving the fees, you know, for the appointments and stuff. So there was, you know, they were doing a lot to assist the doctors on demand was. So I'm sure Teladoc is very similar. And even with the mental health and counseling services, they offer a lot of online counseling services and such as well. It's not just, you know, go to an office and lie down on a couch and talk to somebody. They do a lot of online options as well.
Yeah, I mean, the spike in virtual visits is enormous, and you know, I think for obvious reasons.
So everyone has access to Employee Navigator, like I say. The enrollment guide is available on MITC homepage. If anyone needs access to that, if you have the Zoom links, obviously you've already gotten that because that's where those were located. You know, remind people that you're sitting down at lunch with, if you're sitting with people at lunch, you know, remind them to do their insurance too.
No, I really appreciate everybody's time, and everybody, you know, I hope you're have a great Thanksgiving and healthy families and healthy yourself.
Thank you.
That's Ryan.
Yes, thank you very much, Ryan. Yeah.
Thank you. Take care, everyone. Be well.
Right.
Okay, you too, Jody. Bye-bye.